location wherein it is to be treated as a residential accommodation for student, armed forces, and police. Okay. It also includes those orphanages, nursing homes, and rest homes. And of course, when it comes to all the buildings, that is to be treated as a residence for all of us. So that will be considered as a residential building. It is important for us to discuss the residential because of the, by nature, what by determining what is the definition, we can determine what is the VAT impact on that. So what is not residential? It pertains to movable property. So anything that is related to a building, but that is not fixed on the ground. So in case of this, if the item is actually part of the building, however, you can actually, it's not connected on the ground, and you can actually move it from one place to another, then it will be considered as a movable property. Therefore, it is not to be classified as a residential. Also, building that is used as a hotel, motel, bed, breakfast establishment, or a hospital, those are not to be considered as a residential. So in case that the item is not considered as a residential, what happens is that it will be considered as a as a commercial. Service apartment for its services in addition to the supply of accommodation. So let's us evaluate this one, accommodation. So in most cases, if the because you know, it is normal for construction industry to house their employees in a accommodation, you know, a labor accommodation. So in this case, again, let's if the accommodation is actually providing only for residential, meaning there's no other supplies, like there's no catering, okay, no other services like you know, a laundry, cleaning, okay. In this case, the labor accommodation will be treated as a residential, okay. However, when it comes that if the accommodation, the labor accommodation also provides services like catering, okay, cleaning services, and other services, what happens is that that particular accommodation will be treated as a service apartment. So in that case, it will become a commercial. Okay, so the last item, any building constructed or converted without a lawful authority, okay, that is also not to be considered as a residential. Okay. Also, we have to expand more on the residential building. So, just a reminder to everyone, the first supply of a residential building will be zero rated for what purposes? Okay. So when we say the first supply, the definition is that it includes the supply of building by either sale or lease, but it must be made within the 3 years of building's completion date. Okay, so in this case, if we can say if a residential building offers supply, it will be considered as zero rated. So what will be the VAT impact? So in this case, VAT incurred on costs relating to the first supply is actually recoverable. Okay, so what happened is that even if it is a residential, okay, but it is considered as a first supply, what happened is that the input tax that we incurred, okay, will be recoverable. Okay, so what happened is that if you're already not satisfying the requirements, what happened is that the residential will become an exempt supply. Okay, therefore, any input tax related to that is no longer claimable.
We also have the case where we have commercial real estate. As you guys are understanding, the type of construction supply does affect the compliance accordingly. So commercial real estate would be any land or building which is not designed for residential use, and it's or if it's a building intended for use by charity or relevant charitable activity, and bare land is not considered commercial real estate either. And as you would know, supply of commercial real estate is subject to standard rate of 5%, and any VAT on the cost of construction of a commercial real estate, that supply shall be recoverable in full. And this includes supply of commercial real estate, includes sale or lease. Right. So who are the key players in the construction industry? We have the contractors and the developers who are, who make up the large share of who is directing the construction activities. And then, of course, you have the subcontractors and suppliers that are supporting this. And these are the groups that are involved in the delivery and supply of construction projects. So as a developer, you're acquiring or owning land and engaging contractors to construct the building or structure in it, and then contractors are then called upon by the developer to carry out the construction and take full responsibility for the completion of the project. And they count on subcontractors and suppliers who are engaged by the main contractor to perform portions of the main contractor's work. So now that we understand the different types of construction supply and the different parties involved, let's go into some of the common pitfalls that we're seeing with respect to compliance. All right. Number one, advances. And this was really an issue that came up early on when the VAT law became effective, especially when advances were received before the effective date and then after the effective date. There was some confusion whether VAT would be applied upon it or not. So Arnel, do you want to elaborate further on this?
Okay, thank you, Mr. Zaheer. Yes, we remember during those early times of the VAT in 2018, wherein people are actually confused on this matter, especially of those construction that already began before the VAT effectivity in the UAE. So in this case, most of the time is that the advances already been received before January 1, 2018, and then construction has proceeded in 2018. So in this case, there's a confusion on who will shoulder the VAT. So, however, a good thing in our law, we have what we call a transitional period wherein we are able to determine what will be the VAT impact. Okay. However, now since we're already in 2022, that particular transitional rules is, in most cases, no longer applied. However, we've seen still not even on the outside the construction industry, it is also relevant that in most cases the advances is being missed. People are still thinking in some cases that the advances that you receive is actually not subject to value-added tax. So in this case, that's why in our slide we mentioned here, if the advances received is part of a contract. Okay, for example, your contract price is 100,000, and then you are able to receive an advances which is a 10% of that. So in case that you receive a 10,000, which is part of the 100,000 being the advances, then the advances you receive is actually subject to value-added tax. Okay. However, in some cases, the reason why there's people are still confused is that there's a complexity when it comes to accounting treatment. Okay, so people are still thinking that when you receive an advance, that is actually a liability. Okay, so what's causing the difference? Okay, so in this case, of course, you are implementing IFRS. Okay, when you're implementing IFRS, it mentioned that advances that you receive is actually a liability. So yes, that is true. However, when it comes to the for tax purposes, so we have a different framework, the framework for accounting, and the framework that, as a basis for the tax is the tax law. Okay, so in this case, according to the rules of the VAT, advances is to be treated as a, as a taxable supply. Okay, so what happens that your financial statement or your trial balance will be different from the revenue recognized versus the revenue you have declared to the FTA. Okay, so however, this is quite normal. No, it's quite normal to have a different, that your revenue in trial balance is different versus the revenue you recognize in the FTA portal as your taxable supply. So the differences happens, that's normal. That's why there should be a reconciliation, what's causing the difference. Okay. However, for VAT purposes, again, when you receive an advances, you have to charge value-added tax on that.
So VAT is for that is due upon receipt. So once you receive the advance, 5% should be reported, and within that reporting period for VAT. Now, this is in contrast to deposits, which have a different, or which are different in nature. So deposits that are refundable, and we have deposits that are non-refundable. So refundable deposit is not considered as a supply, and this is outside the scope of VAT. It is not, the deposit will be refunded and is sort of not kept as not received in with respect to the supply itself, or as a consideration being made for the supply. It is something that is refundable, it's just being held, and once the supply is completed, it is given back. So accordingly, it is not under the scope of VAT, where you're supplying a good or a service. When we look at the non-refundable part of a deposit or non-refundable deposit, this would be generally 5% upon receipt. Arnel, you want to add something to this?
Okay. No, Mrs. Zaheer, I think that one is if in case that you have some problem on the refundable deposit, okay, it is also possible that you initially a refundable deposit is a given, or you are able to receive. Okay, so initially you're gonna treat that as as a liability. Therefore, there's no supply on that. The reason our suggestion is not to charge value-added tax. However, the moment you're able to cancel the deposit, or we can say that you have used that deposit, okay, then that is a different case, no? In this case, if you forfeited the deposit, then there's a possibility of a supply. So be careful on the advances, no? Okay.
Yeah. Moving on to date of a supply. So we have one which is date of supply that is not a continuous supply, and we have date of supply when it is a continuous supply. So date of supply that is non-continuous is short-term by nature, and there's no progress billings. And in this case, the tax point is the earliest of the receipt of payment, or the issuance of a tax invoice, or completion of service. So this is fairly straightforward. VAT should be accounted for when you receive the payment, or issued a tax invoice, or completion of service, whichever comes earliest, right? So you are immediately liable for the VAT. If you complete the service ahead of issuing the tax invoice and receive the payment, then you should be putting according for the VAT accordingly. Then this contrasts when it's a continuous supply. So this is long-term, and there's progress billings involved, and the tax point is the earliest of the receipt of payment, issuance of the tax invoice, or the due date of the payment mentioned on the tax invoice. So, Arnel, if you would like to add to this.
Okay, sure. So in our this is important as well because sometimes a construction can be treated as a short term and a long term. So what's the difference between the short term and long term is that you have to determine. Okay, first of all, Mr. Zaheer has mentioned not a continuous supply, or we can say short term. If that is the case, there's what we call a date of supply. So when it comes to the date of supply, we have to consider two things. That is article number 25, and the other one is article number 26. When we say article number 25, we're dealing with a one-time service. Okay, so because the reason we're talking about a service because we're discussing the construction industry. So article number 25, we have to apply it whenever you're providing a services that is to be considered as a one-time service, okay, a short-term by nature. It means that also that you're gonna raise a tax invoice only once, okay? So if that is the case, there will be a different date of supply, as Mr. Zaheer has mentioned in the previous slide. However, if we're talking about a supply that is considered as a long-term by nature or a continuous supply, we're gonna use article number 26 on this matter. So if that is the case, it means that there's a progress billing. For each of the progress billing, you're gonna raise your own tax invoices. Okay, so in this case, the tax point will be the earliest of receipt of payment, issuance of a tax invoice, or due date mentioned on those tax invoice. So there's a difference. So the most common error here is not determining the date of supply. Okay, that's why when it comes to article number 26, it's also in parallel that on what we have mentioned on advances. Because, for example, if you receive an advances as part of the contract amount, in this case, you receive the advances without making a progress. So in this case, the tax point will be at the time you receive a cash. So this is actually in parallel with the article number 26.
Please note that the certification will not trigger date of supply, and that also there is a 12-month rule that would apply. Arnel, you want to elaborate on the 12-month rule?
Okay, so when it comes to the 12-month rule, okay, so we're gonna discuss a little something about it when it comes to the retention part. So, okay, Rich, we're gonna discuss later in the incoming slides.
Yeah. So retention payments as a continuous supply. So this the article that is connected to this is Article 26 of the decree law, and tax point is the earliest of the time the retention has been made or issuance of the tax invoice. Or third, 12 months from the date the work has been signed off as complete. Yes, go ahead.
Okay, so in this case, when it comes to the retention, okay, so there's also two things that we have to consider. Okay, if the original supply is actually related to article number 25, one-time billing, okay, then there will be a different treatment on the retention part of that. Okay, so in other words, we have to follow whatever is the original. Okay, so that's why in this particular slide we mentioned if the construction retention is related to continuous supply. When we say continuous supply, it relates to article number 26. Then we have to follow whatever is the original. Okay, so in this case, the tax point or the date of supply is the earliest of the retention payment has been made, or we also call it as a cash receipt, wherein you already received the cash. So in that case, the retention is due on that time you receive the cash, or it can be at the time you issue the tax invoice. Okay, or it could be the 12-month rule. What's the 12-month rule? a 12-month rule, for example, you're not able to receive the retention in a form of payment to you. You are also not able to issue the tax invoice. However, the 12-month rule has already been satisfied. It means that you have to account on your VAT return the retention regardless of item number 1 or item number 2. Okay, so you have to really focus on this one, because in some cases we are able to miss the 12-month rule. Okay, so it means that if you are not going to account this, what happens is that your VAT return for a particular period is understated because you're not able to account the VAT related to the retention. So you have to be careful on the anniversary of your the work that you have signed off. Okay, so because it affects the retention, especially if you're applying article number 26 from the beginning.
And quickly, if you can just mention regarding retention as a single supply, the tax
Okay,
is the
sure.
earliest of, yeah, go ahead.
Okay, so in this case, if the original billings that you have raised is article number 25 or one-time billing, so it also mentioned that it is not a continuous supply, then the retention will be made, will be the earliest of the time of the retention payment has been made, or cash receipt, tax invoice, or the work that has been signed off as complete. Okay, so there's a difference to that. Yes, we can continue, Mr. Zaheer.
Yep. So we have a bit of a graph here now, just to say, so how to
Yes.
sort of process flow chart. So if construction service has been provided before the 1st of January 2018, completion not dependent on retention sign off, then or when the retention payment is due in 2017 but paid in 2018, retention is considered outside the scope of VAT. Because it relates to, now, in the event that retention payment is due in 2018, then once again, retention is outside the scope of VAT, the VAT law. Now, in the case where it's dependent on retention sign off, then was the retention sign off done before 1st of January 2018? Then it is outside the scope. But if it is done after 1st of January 2018, then it is subject to VAT. Yes, Arnel.
Okay, so in this particular slide, we have just displayed to you what are you going to do for the treatment on the retention, wherein the construction started before the VAT implementation and it was completed after that. Okay, so then in our next slides, okay, so what we're gonna mention to you, what are you going to do with the retention when it comes to the, for all the construction contracts that after January 1, 2018. So this is much straightforward because in most cases, the retention that the construction retention of the retention part of the construction, which has happened after January 1, 2018, in most cases, it will be subject to value-added tax.
And in the event that the completion is dependent on retention sign-off, then once again, the cash receipt, tax invoice sign-off date, retention is subject to VAT. Most of us are all now past that effective date, but for those who are still doing projects that were contracted before it, the previous slide is what applies. Right. So compensation due to loss of income, this is outside the scope of VAT. There is no treatment here when it comes to compensation due to the loss of income.
Yes.
And compensation due to work already done, that is in most cases VATable 5%. So it'll be between Article 25 or 26.
Correct. Okay, a little thing about the work suspension is that I'll give you the scenario. I think you are more familiar with this one for those in a construction industry wherein there's what we call a delay. Okay, especially what happened during the pandemic, right? So what happens is that there will be a work suspension. Okay, so there are two things to be considered here, wherein the cost, okay, because of the loss of income, okay, wherein the subcontractor is actually charging the employers on those particular costs. So in that case, there's no supply on that. So what happened is that there will be no VAT implication on that. However, for the compensation that is related to the work done already, okay, there will be there will be value-added tax impact on that. Okay, so the reason we mentioned also Article 25 and 26 here, it depends on the you have to follow with what particular date of supply you're applying. So that is the treatment for that.
How about when it comes to claims? So let's just pull up the information here. It has no VAT impact. Will have an impact on the VAT and the basis of charging the taxable supply. Right. And tax invoice, it's very important to note that the tax invoice is a commercial document and it should lay out all the details. Should be in the format that presents all these details. And the same thing with respect to the credit note. When it's being issued, it should have the correct details, and it is issued in the event of correcting an earlier tax invoice or decrease the value of supply, or to decrease, and it decreases the VAT amount accordingly. Counter supplies. This is a scenario when a main contractor supplies the building material to the subcontractor, or a contractor providing the building material to the subcontractor. So these are some counter supply scenarios that exist between the contractor and subcontractor. So in this case, counter supplies between main contractor and subcontractor, generally that it's a taxable supply between the two. Arnel, you want to elaborate on this? If you can unmute your microphone.
By the way, Mr. Zaheer, we have been hearing this from our client itself, wherein they are the main contractor. However, the subcontractor doesn't have the resources to buy the materials. Okay, so in this case, the subcontractor will actually the contractor will actually buy those materials to the use for the project. Okay, and then they're gonna charge it to the subcontractor. So in this case, there are actually two supplies. One is the services provided by the subcontractor to the contractor, and at the same time, the contractor also providing the goods to the subcontractor. That's the reason we call it the counter supply. So it is actually normal. Okay. However, sometimes the treatment on the way they're recording the impact is actually that makes it complicated. So in this case, we have what we call a suggestion. So actually, it is a taxable supply between the main contractor and the subcontractor. And at the same time, how are you going to treat that when it comes to tax invoicing? So in this case, it will be difficult for you to net it off. So what we are actually recommending is to raise a separate tax invoices for that, because it's difficult to reflect on a one tax invoice. So in this case, it will be helpful for you guys if you're gonna separate it as a separate tax invoices. Do not net it off, to make it a little simple.
Right, and the next we look at liquidated damages and a certain all right, by definition, these are fines or compensation imposed to a contractor or supplier who fails to fulfill a contractual obligation as stipulated in the contract. In this case, VAT treatment is outside of the scope. It's outside the scope. And when it comes to snagging, this is when the customer is not happy with the standard of the work provided by the builder. And in this case, the builder will be asked to rectify the snag, usually at their own cost. And developer may invite a different builder to resolve the snags. That can happen. So where the contractor corrects the snag, where original builder is correcting the snag, there will be no further consideration, and there's no supplies being made with respect to the snagging works, and it's considered as part of the original supply, so no impact on the VAT. If they're using a third party to correct the snags, well, in this case, additional supply of services to the customer and VAT will be due on that supply, which is 5%. Okay, motor vehicles, Article 53(1)(b) of the executive regulation is the one that people should look at. And the common mistakes are claiming input VAT related to motor vehicles. So you cannot claim the input from motor vehicles that are being available for personal use. So it's important to know what is claimable and not claimable. So in the event that a motor vehicle was purchased and rented or leased for use in business and is available for personal use by anyone, well, this is non-recoverable because of the personal use of that motor vehicle. So, Arnel, you want to elaborate on this?
Yes, Mr. Zaheer. So this is also not only for the construction industry, but all types of types of industry. Wherein in most cases, this is also what happened. Wherein if the motor vehicle is even owned by the company, okay, whether it was a purchase or being rented. However, at the end of the office hour, it becomes available for the personal use of the employee. So in this case, that particular motor vehicle will be treated as black expenses. Okay, when a particular item is considered as a black expenses, you can no longer claim any input tax related to that item. So in case that you have claimed it in the past, okay, you have to determine what is the VAT impact on your previous. What happens if you're gonna keep on doing this? What happens is that your input tax is overstated. So you can make an adjustment to that, depends on the amount. However, in case that you're not aware of this one, try to make an assessment of whether, try to consider that again next time to reassess on what is, if you have a vehicle that is available for the personal use of employee.
What is a motor vehicle under the UAE VAT law? It means a road vehicle which is designed or adapted for the conveyance of no more than 10 people, including the driver. So it will exclude things like a forklift, a hoist, truck, similar types of vehicles. Another type of motor vehicle that is not considered available for private use, taxis licensed by a competent authority, and motor vehicles registered for emergency purposes by police, fire, and ambulance, and vehicle which is used in a vehicle rental business where it is rented to a customer. So, Arnold, what in the case where if motor vehicle is available for personal use but is legally owned by the company, can they still claim the input VAT?
The problem here is that no, they can no longer claim that that particular item or the vehicle will be considered as a black expenses. Okay, so based on our experience, Mrs. Zaheer, we've seen that they're not claiming the fuel, okay, for the black expenses or the black vehicle. However, fuel is one of the expenses that is considered as black, but you have to consider other things. Like, for example, the insurance related to that motor vehicle, the repair of that particular vehicle, okay, and any other cost that relates to that, So you cannot claim this one as long as if the vehicle is available for the personal use. Okay, so in case that the motor vehicle is actually not available for the personal use of employee, then you can actually claim that one. Okay, one more thing about the motor vehicle again. When you are purchasing the vehicle, the first instinct of all the accountants is actually to claim the input tax. Okay, so that you have to consider also that when you are purchasing a vehicle, you already have the idea on whether that particular vehicle will be available for the personal use. Okay, who's the particular employee who will use that vehicle? If you can actually, if you already know that it will become available for the personal use, then do not claim also the purchase price, because that is also included as a block expenses.
Right. So now we just to discuss labor accommodations. What is the VAT impact? This will be a residential accommodation, a labor claim which is provided by the employer, and consideration is received from its employee, and it'll be considered as an exempt supply because of the nature of it being residential. Of course, this means that any input tax on this is not claimable. And now residential with no fee charged to the staff, then no supply is considered, therefore there is no VAT being applied here. Right. Definition: the value of supply is the value on which VAT is chargeable, and this includes any consideration in terms of in money, consideration in kind, and monetary in kind. And of course, it's always a net of discount, so you'll remove the discount before calculating the VAT. Okay. So moving on from VAT after discount, and then retention has been removed. Progress billings less retention, and the VAT will be computed on the amount after retention has been deducted. Arnel, you want to say anything on these points?
Nothing, Mr. Zaheer, thank you.
All right. So now coming to the topic of reimbursement, when a contractor purchases the materials for a subcontractor and the former recover the material cost from the contractor, in this case, the contract must charge VAT to the subcon at 5%. And in the case of a disbursement, is when a contractor is acting as an agent and facilitating the payment on behalf of the contractor to the supplier, then it is considered a disbursement. And the VAT impact on this is that it is outside of the scope, as you can expect. And input VAT cannot be recovered by the contractor in this case. Right. Common errors and to avoid and its remedial actions. So one thing to know.
Mr. Zaheer, you're in a mute.
Oops, sorry. Sorry, started chatting on the mute. I assume you missed this part. So common errors to avoid and its remedies. So the common errors are borne about by because of the pressures of compliance are usually on the accounting department alone, and there's very limited division of responsibility, and it really requires the educating of other departments, including tendering, marketing, procurement, HR, and management, just because of the complex nature of VAT supply in construction. And all these departments have a part to play in the compliance matter. Ignoring staff trainings, yes. when employees aren't briefed on the VAT compliance and the impact of whatever they're doing has on the VAT, then this is creates a situation where there may be possible errors. So training such as coming to webinars like this allows to strengthen employees' skills, and that way they are on the same page when it comes to VAT and compliance. Folks aren't familiar fully with the regulations. It seems straightforward, but actually it's not. And as time has progressed, we have had various clarifications that have come out. And as our economy gets more complex, now we have cases where payments are being done on cryptocurrency and whatnot, and there's digital assets. So the regulation keeps getting updated, and for someone who is not always up to date, they may miss certain things or miss certain bulletins that come out, and then accordingly they fall into non-compliance. Understanding the basics helps build a strong foundation of for VAT, and the main examples of knowing what the definitions are and the supply and threshold. Accounting software, we still see some contractors still using Excel and other types of ways of maintaining their records and not getting a proper accounting software. And we highly recommend folks to start using a VAT capable software and migrating to that to help with their financial reporting and VAT compliance matters. The other thing is not able to determine the type of supplies they do and the VAT impact. So this is also another common error. Knowing the type of supplies that they're rendering is important, and for goods, the treatment may be different depending if they're in certain designated zones. Contracts should be reviewed with respect to VAT clauses, and this was very important at the time of the VAT effective date in 1st of January 2018, and if possible, it has to maybe made revisions to and negotiate. And we should consider the legal and financial impact of this. Arnold, would you like to add something on what I have just mentioned?
Okay. So in this case, it's important for you to review the contracts. But I think because of the people are already aware of this one, so we have seen less and less of this one. In case that you don't have a contract, you have to consider also the LPOs that you are signing. Make sure that the responsibility for the value-added tax has been fixed on those.
Not consulting expert on complicated transactions. We've seen this time and time again, where companies will or staff will go it alone, and without relying on an expert party, that it may lead to errors and wrong VAT return. And future, if you want to remedy this, then you'll have to reach out to an expert to help you send a user clarification form or some type of reconsideration form. New companies also commit some errors with respect to when they are registering, when they're reaching the threshold, and when they've crossed it. So there are errors with respect to late registration, and this leads to penalties. So it requires a deeper understanding of the threshold. We have a case where folks will not be clear on whether they have crossed the threshold or not, and as a result, when they do go to register, they end up getting penalized for a late registration. Failure to deregister can also, within the certain time, that can also result in fine or penalty. It may result in a penalty of 1,000 dirhams per month of delay. Max is about 10,000. The time limit to make a deregistration is 120 business days at the time of the closure of the company. We also have the issues when it comes to an accounting software. It may not be VAT compliant, and so we want if you're looking to take on accounting software, make sure it is fit for your purpose, for your business to generate appropriate VAT returns. Incorrect details on the tax invoices is a common error. That could be the wrong TRN, might be missing some information. So you should consider making a revision to the document, such as tax invoice or tax credit memo, and refer to the minimum requirements of the tax invoices for these documents. Another common error is not issuing the tax invoice within the limit of the 14 days from date of supply. This is another error that we see. So we should be careful on to know when the tax point is reached, and it should be also involving some of the other departments, and you have to monitor the dates of delivery. All these things are important. Arnel, would you like to add anything here?
Yes. So in this case, it is very important for us. That's why the date of supply is very important, because in computing the 14 days rule, it should be from the date of supply. So if you don't, if you're not aware of the date of supply, then there's a possibility that you're gonna miss you're gonna deliver the tax invoice more than the 14 days rule. So the key here is determining the accurate dates of supply for each of each of the services you're doing. For example, as we have mentioned here, we know the construction industry is actually dealing mostly in services. Okay. However, in some cases, there's a possibility of delivery of the goods. For example, the supply between the contractor and the subcontractor. That's the one we have mentioned a while ago. So in this case, the main contractor will buy the goods, okay, and then he will give it to the subcon for the project. So in this case, this is how actually a supply of goods, okay. So there's a different tax supply, the date of supply when it comes to the goods, and there's a different supply rule when it comes to the services. So knowing those things, will have an impact on your VAT compliance.
Tax invoices are not delivered to the customers. This is important. You should educate your sales and marketing departments, or whoever is dealing with providing this documentation to the customer. Review the tax the rules on tax points. Issue the tax invoice within the time limit. It's important that if the good has been delivered or the service has been completed, the tax invoice should be issued within 2 weeks. Failure to charge VAT on the sale of business assets. So we should know the difference between the different types of assets, and also the sales and accounting departments should be reviewed. This is with respect to transfer of a business as a going concern. So there's some clarifications on this. Arnel, can you elaborate, please?
Okay. So when it comes to this one, so of course, you are actually buying your fixed asset for a particular, for example, in a particular project. Okay. So in this case, you are claiming the input tax for that because of the business purpose. Okay. Then after that, you decide to sell the asset. So in this case, you have to charge value-added tax on the sale of these assets. So there should be a clear distinction between, TGOC, we call it a transfer on the ongoing concern. So in this case, if the transfer of the asset or a business unit is treated as a TGOC, then that is outside the scope of VAT. However, when it comes to the ordinary sale of asset, you have to charge value-added tax on that.
Another common error, no VAT was charged on advances and deposits. We have to review the transitional rules when it comes to if this was a project that was being done before the effective date of 1st January 2018, and review invoicing for possible non-compliance, and reissue a tax invoice or for possible adjustments. And failure to detect the deemed supplies. Arnel, this is another issue that we're facing sometimes when it comes to deemed supply. What is a deemed supply, so everyone can understand?
Okay, so when we say deemed supply, it is to be treated as there's a VAT impact on that. So when we say deemed supply, as if there's a taxable supply that occurred. So in this case, if there's a taxable supply that occurred, it means that you have to charge value-added tax, okay, issue a tax invoice, and account the output tax on that. Okay, so the common mistake here is not determining what is the deemed supply. So there are 4 types of a deemed supply. So you're gonna find it in the regulation. We wanted to explore more. We wanted to actually discuss that. However, we don't have much time to discuss entirely.
Yeah.
So if you have more question, we'll be happy to
yes, please.
Discuss it with you.
We're slowly coming to the end of our presentation. So if you do have any questions, if you can just put them in the chat box and we will take them up. Insufficient knowledge of the tax points or the date of supply. This may be, this of course results in incorrect VAT returns, and maybe it's due to someone's incorrect understanding of how to understand when the date of supply is occurring. And so it's important to review the rules on tax points. TRN number should be checked. We've also come across this where the TRN is not correct or not valid. So when you have a new supplier or they're one of your supplier or customers, they've changed their TRN numbers, you want to ensure that it is correct, because that would then be a mistake and your documentation would be then incorrect. So always verify the TRN of both the customer and the suppliers, and assign to other departments, and educate the sales and marketing department and procurement departments on this.
Going back to that, Mrs. Zaheer, have you noticed, Mrs. Zaheer, that we have been doing so many amendments in the VAT? For example, one company is actually part of the tax group, and then suddenly the tax group has been liquidated. So imagine that that particular company that already been removed from a tax group, they're gonna have a different TRN nowadays. So as Mr. Zaheer has mentioned, you have to make sure that you still have the correct TRN number of your suppliers and clients.
Claiming input VAT on motor vehicles, as we discussed, we should review the past VAT returns, review the personal use of vehicles, and possibly you would have to submit a VAT return or submit you have to correct a previously incorrect VAT return by submitting a voluntary disclosure. Filling the VAT return at the last minute. Once again, we see this a lot. It's important to get ahead when you're that month that you're supposed to report, and start to do things earlier, because rushing may result in errors and might result in possible late submission, and of course that immediately results in penalty charges. So in your reporting month, it is better to start working on to prepare the filing earlier in the month as opposed to in the last days before the 28th. Claiming input VAT on entertainment expenses. This is incorrect. So please review the past entertainment expenses and file a voluntary disclosure to correct it if you have incorrectly claimed the VAT on entertainment expenses. Arnold, what would constitute entertainment expenses?
Okay, so we have two types of black expenses. The most common type is, the motor vehicle, which we already discussed, and the other one is entertainment. So entertainment that is provided to a third party, which is not an employee of your company. Okay, that is already a black expenses. So what are those entertainment? For example, no, you're gonna treat somebody to a hotel for a meal. So that is we can say that is not done normally not done normally. So what happens? Those input tax are actually not claimable. So that is entertainment of all kind, like a provision of accommodation, an event, okay, or a gift. Those are actually not claimable.
Claiming input on VAT without supporting documents. Please, you should not be claiming without the appropriate tax invoice, the VAT. So review your past VAT returns and train your procurement departments and improve the internal control to make sure that you have the documentation to claim the VAT on any of your expenses. We have seen this as well, where input VAT is claimed more than once. Of course, this has to leads to an overstatement of the input VAT, and this is if caught or if found, then this would be a possible penalty. As we know in construction and contracting, there's a lot of suppliers. If you have a large project and you have subcontractors and so many documentations, it's easy to get overwhelmed and then possibly by mistake claim the input VAT twice. Claiming input VAT on non-business use expenses. So this could also lead to a possible penalty, and this should be corrected in the next VAT return or by voluntary disclosure, depending on the value of this. Usually in the cases when it is above 10,000, then you would file a voluntary disclosure, and if it is below 10,000, then it can be corrected in the next VAT return. Yes, Arnel, go ahead. Yes, Mr. Arnel.
Yes. Mm-hmm. Okay, so that is yes. Yeah, you can go to the next slide, Mr. Zaheer.
Discussing the time frame.
Yes, so I think there's already a question on the chat box that relates to this. So remember, when it comes to the time frame of claiming the input tax, of course, you have to review your documentation. Okay, so we have several rules when it comes to claiming all the input tax. Okay, so when it comes to the time frame, you will be needing two items only. Number one is that you already have the tax invoice, the copy of the tax invoices. You have already a copy of that coming from the supplier. Okay, that's the first requirement. And the second one is that if you're still not paying that, you have the intention to pay. So remember those two things. Okay, so if you satisfy those two things, documentation, you have the tax invoices, and number two is that you have the intention to pay. What happens is that you claim the input tax on the current VAT return. Okay. However, for example, you miss the current VAT return. Okay, you still have the opportunity to claim that on the next tax period. Okay, so if you have those two requirements, however, you miss two tax period. So what happens is that you already beyond the limit. Okay, it means that you can no longer claim the input tax related to that particular tax invoices from the supplier. Okay, so remember, only if you meet those two requirements, you have only two tax period. Okay, for example, if you have quarterly, it means 2 quarters. So that is like 6 months. However, on the other hand, if you have your monthly basis, that's only 2 months. So remember that. So in this case, if in case that you go beyond that limit, okay, you have to also consider that you already lost the ability to claim that input tax. So the only way you are able to claim the tax invoices that it goes beyond that the time frame is that by filing a voluntary disclosure. So remember that. So in case that the input tax is higher than the amount of the penalty, then you file the voluntary disclosure in order for you to claim the particular input tax. So I think people are still confused on the time frame. So you have to make a review on that. There's a separate public clarification from the FTA related to that.
Another common error is not claiming the input VAT prior to VAT registrations. So input VAT incurred prior to VAT registration can be claimed if it meets certain requirements, and you can claim the input VAT provided they are not blocked expenses. Those who have mixed supplies, exempt, sometimes they're providing a supply that is exempt. Then we have to, the common errors we should look at is that the common errors occur with respect to apportionment rules. So we highly advise you to seek help on this rather than going it alone. Apportionment is you have to manage this carefully. Arnel, how would you encourage everybody else with respect to apportionment on mixed supplies?
Okay, so for the apportionment of input tax, okay, one thing is that it happens only after the end of your financial year or given, for example, in most of us, if your financial year ends on 31 December, what happens is that you're going to make an adjustment on your input tax. So we call it apportionment of the input tax. This is also relevant only on those industry who has a mixed supply. Okay, so it means that you have a taxable supply and you also have a mixed supply. So in this case, if you're having a mixed supply, not all the input tax related to that is actually claimable. You have to make an apportionment. Okay, so there's a different treatment for that. So okay, a different industry. We have what we call a standard apportionment. Okay, we call it the input tax method. Okay, so most of the industry can actually use this. However, if you're like a specialized industry, okay, like a financial institution, okay, so there are some types of apportionment that is actually that you have to ask for a permission before you can actually use that. Okay, so there are certain rules related to that, so that's why you have to be careful on those aspects, because you know, in case that you are not sure whether you're using a correct method, then you know you can actually consult us on this matter. And also there's also a little complexity on the computations. You know, if you have some question on that, then we can actually help you on
that. Not knowing the difference between reimbursement and disbursement, this also results in incorrect billings and may affect the record keeping and VAT returns. Remember that that reimbursement is subject to VAT and the disbursement is out of scope for VAT. Another error is not using the UAE central bank rate on the date. For the tax invoice, you should be using the rate that is published by the UAE central bank. This, when it first came about, was not available, but starting 17th May 2018, this date has been published on a daily basis. So use the UAE central bank foreign rate, not what you find online. Incorrect use of foreign currency rate on tax invoices with respect to the rounding off. Central bank must be used. And so if the rate is 4.528745, the entire amount must be used and should not be rounded off to 4.53. On the tax invoice level, the total must be rounded off to 2 decimal places. So please note that. Failure to differentiate between the zero-rated supplies from the exempt. For zero-rated supplies, we must refer to Cabinet Decision number 52, Articles 30, 241, And for exempt supplies, we should be looking at Articles 42 to 45. Sometimes people are using the adjustment column, which is the third column, to correct VAT returns. Please do not use this. This is not correct. Do not use this column. Do not correct the VAT return through the adjustment column. This may lead to penalties, and it is most definitely lead to incorrect VAT return. VAT returns includes transactions which are out of scope of the UAE VAT, and this also could lead to incorrect VAT return. So please review your VAT return for possible non-compliance. If you are accounting for transactions that are normally out of scope. Failure to use the correct box in the VAT returns when is also results in an incorrect VAT return and will require correction. For zero-rated supplies, we have to refer to Cabinet decision number 52, Articles 30 to 41. So, and similarly for exempt, it is Articles 42 to 45. Failure to file the VAT return due to lack of activity. This is another case where companies maybe they are their business is just starting out and they did not actually file VAT returns because they have no revenue coming in. But hey, but you are, once you get registered, you are bound to submit your VAT return regardless of your business activity every month or every quarter, depending on your filing status. And then, of course, if you are not doing any business, you have to, and you're not meeting the threshold, then you should be deregistering. That can also incorrect timeliness with respect to deregistration can also result in administrative penalty. Boxes number 1 of VAT Emirates-wise was filled up on the basis of customer location. This is also another common error that we saw, where based on where their customer is, they're putting my customers in Sharjah, my customers in Ajman, and they're putting them out there. That is not the case. You should be putting, you should be filling out the box according to where your location of business is, where you're doing the supply of the good and service. So that should be how you are filling out box number 1.
Okay, in addition to that, Mr. Zaheer, let me just mention, I think during this month, we have received inquiries from our previous attendees that they have been called by the authority, wherein they're getting their attention that their per Emirates is actually incorrect. So in this case, they came to us on a in a span of 3 days, wherein the same they're asking us on what they're gonna do. Okay, so in this case, not you have to review your past VAT return before you get a call from the authority. Okay, so in this case, if again just like Mr. Zaheer has mentioned, you have to be careful on placing the supply on per Emirates. Do not place the supply based on the customer's location. Okay, that would be incorrect. So again, review your past VAT return, whether you've done it in the past. Okay. And then, otherwise you're going to get a call from the authority because of it actually considers a wrong filing.
Yep. Another common error is import of services from a foreign entities was not taken into account under the reverse charge mechanism. This results in wrong bookkeeping and non-compliance. If you are receiving any type of service from abroad, it is not zero rated, it is not out of scope. This is an import of service. You need to account for that in your by charging yourself the VAT and then immediately claiming it back. Yes, the net impact is 0, but it is there is an aspect of compliance to this. So it is not zero rated or exempt or whatever that people have assumed it to be if you're buying services from abroad and benefiting from that for your existing operations here in the UAE. Not identifying personal expenses from the business expense. This is another common error. Please, everybody, admin managers, financial controllers, make sure there is a clear delineation between business expense and personal expense. This is going to become even more critical next year with respect to the implementation of corporate tax. And if you're taking personal expenses and then claiming VAT on it, this is incorrect. not displaying the prices inclusive of tax. This happened as well, where vendors are not are still displaying the price without the VAT. This is another error. There are teams that are reviewing this, and they're checking to make sure that anybody who puts a sticker price or displays a price, it should be the price inclusive of tax. And that should be also when they're receiving the printout of their bill. Not informing the authority that the VAT return includes transactions which are based on profit margin schemes. This also will result to a penalty. Sometimes folks are ignoring this because maybe they don't understand what it is. Arnel, quickly, can you explain to everyone what a profit margin scheme is?
Okay. So usually if we're gonna sell goods or services, we're actually charging VAT based on, the consideration we're expected to receive. Okay, so that is based on the value of supply rule. Okay. However, in some instances, if a company is actually selling goods which is actually considered as a profit margin scheme, so in this case we will not charge value-added tax on a regular selling price. Okay, from the term itself, profit margin scheme. So it means we're gonna charge VAT based on the profit or a margin. For example, if you buy an item that is subject to second-hand, as a second-hand, you buy an item that is worth 8,000. However, you're gonna sell it at 10,000. So you have a margin of 2,000. If you're applying profit margin scheme, therefore you will not charge VAT on the 10,000. You will charge VAT on the 2,000, which is the profit margin, the profit margin of that sale. So in case that you are using that, if you're using a profit margin scheme, okay. So what happened in your VAT return? There's a question there before you submit. Are you using profit margin scheme? You have to mention yes. Okay. However, if you're not using profit margin scheme, by default, it is no. You don't have to do anything. Okay. However, if you're gonna miss this one, there's a penalty for that. So that's why if you're actually applying profit margin scheme, then you have to mention yes in all your VAT returns.
Another common error is related to intercompany transactions. So intercompany supplies between parties that are within a VAT group as opposed to outside the VAT group. If you're outside the VAT group, then you must charge 5%. If you're within a VAT group, then it is considered out of scope. So intercompany supplies between related parties which are not in the VAT group are within the scope of UAVT. Yeah. Input VAT claims on insurance paid by companies for employees' dependents. If a company is paid for the insurance premium of employees' dependents, in some cases the input VAT is not claimable. And this is dependent on the Emirates where the companies are situated. Right. This is coming to the end of our presentation. I see some questions have come up. Thank you so much. It was a bit of a lengthy presentation. I understand. We wanted to go over some of all the areas that we've been seeing with respect to some of our clients, as well as what we've seen in the market, areas that people are unfortunately committing, and some of the remedial actions. This is your chance to ask us any questions, if and we can take that up. But as everyone writes something in, I just want to say the best way to ace your compliance is, to look towards having an advisor, a consultant like us, to help you with your compliance matters. It provides you a layer of assurance to make sure that you are up to date, that you don't have any errors, that you can get ahead of anything before it happens. As financial controllers and accountants, you have many different areas in construction contracting that you have to oversee. So it really helps to have an outside party to assist you, and not just to file and fill out these VAT returns and submit them on your behalf, but actually review your transactions and to make sure the tax treatment is correct, and make sure, yes, it is accurate, the supporting documentation is there. There is value in that. So do consider getting support for your compliance matters. And with that, I will check some of the questions and we can discuss. All right, I'll just go to the chat box right now. And we have question from Mr. Abdul Shakur. Thank you for joining us. Can I recover input VAT on tax invoice without TRN amount below 10,000? Example, electricity bill without TRN. So Arnel, the question is, can they recover input VAT on a tax invoice that does not have a TRN? An electricity bill without TRN. So that's the question. Arnel, you are on mute.
Yes. Yes. So what we're trying to what we're gonna advise you is that if it is a utility, you have to inform the utility supplier to use your TRN number in the next in the next bills. In the past, yes, you can actually claim that one.
All right.
However, what we advise you is that insist on letting the supplier use your TRN number in most cases, in all cases. That one, so that there will be no future, no future questionable. When it comes to the utility, of course, if it is for the business purpose, and then that is fine.
Right. In the Q&A section, anonymous attendee, thanks. Can you please elaborate more on the sales of used assets, not the going of concern, which you said are taxable? We know that used cars, for example, are not taxable when sold.
Okay, so in this case, there are actually many complications when it comes to this matter. So in this case, in most cases, what we advise you is that to charge VAT upon the sale, based on the sale price on this one.
Yeah. Mr. Muhammad Nurul Haq.
Yes. In additional reference to that is that if you're gonna look at the public clarification that pertains to TGOC, or transfer on ongoing concern, that is actually been clarified by the FTA.
Yeah. Thank you, Mr. Muhammad Nurul Haq, for joining us. VAT on telephone and electricity bills are claimable. You'll have to elaborate more. If the telephone is being used for personal use, no, it cannot be claimed. If the electricity bill is, yes, it can be claimed, as long as you have your company name and your TRN, and it is within the time of being of claiming. Another thing we should mention is that if an expense is more than 6 months, you are not able to claim that. So it has to be within 6 months. Arnel, you want to add anything on this?
Yes. Thank you for that question. Actually, in addition to that, of course, we have some public clarification that pertains to mobile charges, wherein, for example, you have assigned a mobile to one of your employees, one or more of your employees. Usually it happens for the marketing. Okay, so what happened there is that if you have to satisfy the requirements before you can claim the input tax on that. Okay, so the what the clarification is saying is that you should have that particular bill should be in the company name. Okay, that's number one. Number two is that you have a written policy pertaining to that. Okay, that's very important for you too before you're able to claim the input tax related to mobile charges. And at the same time, there should be a proper monitoring. Okay, and one more thing is that aside for the monitoring, in case that the employee breaks that policy, there should be a consequences on that. So in case that you're satisfying those requirements, then when it comes to the mobile charges, you can claim that. However, if you're not satisfying any of those things, do not claim the input tax related to the mobile charges. Otherwise, you will be not in compliance.
Yeah, I think he has just typed in saying using business and personal purposes. and the bill is under the company name. So I think that's very clear, Mr. Nurul Haq, that you cannot claim it if you are using it for personal purposes. Okay, motor vehicles partly used for business purposes and personally. In the case of VAT on fuel and maintenance costs, are they claimable? Once again, I think the theme is very clear here. If you are using a motor vehicle for personal use, then you have to show how you're apportioning it for which part is business and which one is personal. But in the case of fuel and maintenance, once again, it has to be clearly identified that it is for business purposes. Otherwise, you're in non-compliance. Ms. Rowena, thank you for joining us. Invoice was issued on a certain period, but payment takes so much delay that falls to another period, and the amount of receipt against invoice is not the same. Shall I follow the receipt amount for VAT purposes? Okay, Ms. Rowena, yes, this is unfortunately a problem where if you give your tax invoice to a customer and then they don't pay, you are of course you're liable for the VAT in the period that you billed. So you must pay the VAT regardless of whether your customer has paid you. And if the receipt amount is not the same, then of course you will have to do an accounting entry where you're writing off the part that you're not going to receive, or if you're not planning to receive any further and the rest of the invoiced amount, then you should do an entry to write it off, and then accordingly in your VAT return you can claim that, but it has to be written off from your books before you remove it as you claim it back from with respect to the VAT you have paid. Arnel, anything else to say on this?
Nothing, Mr. Zaheer.
All right, great. Then we have one question from Mr. Abdul Shakur. Okay, we have some more questions that have come up into the chat box here. So just bear with me. I'll go back to the top. Okay. We have a question. Property management fee paid to property management company who is managing the services in the labor camp, is it subject to VAT?
Yes. Yes, it is subject to property management that actually providing the services. Yes.
Yep.
That is you have to charge value-added tax on that.
Right.
So it's about the one who's running the labor accommodation, or the property that's providing the residential. For example, if you're providing residential services, and then that is and then suddenly you have expenses coming from a management company. So what happens that the input tax cannot be claimed because of the supply is actually exempt. So therefore, all the input tax related to that is not claimable.
Yeah.
However, the property management should actually charge value-added tax on that services.
Okay. Next question is, do you provide a certificate after the webinar? And no, Mark, we do not. Unfortunately, this is not a licensed session, but we appreciate you being with us. Okay. Ms. Shoban has another question. In construction industry, we can raise a tax invoice only after payment certificate is certified by a client, which may exceed 14 days from date of supply. Will this be fine with the FTA?
Yes.
Okay.
Yeah. Actually, yeah, you are fine. Thank you for your question. As we have mentioned before, if you're gonna look at the date of supply when it comes to construction, that is a long-term by nature. So that is article number 26. So in that case, what is the date of supply when it comes to article number 26, which is a continuous supply? Number 1, cash receipt. Okay. Number 2, tax invoices. Okay. And number 3, due date on the mentioned on the tax invoices. So there's no such thing as a delivery or performance. So in this case, your tax point will be the invoice. So there's no issue on that.
Ms. Teresa asked question related to the tax invoice date. Some clients are requesting current dated tax invoice, which was issued beyond 6 months. Do we need to provide a current date invoice and void the original issued invoice? What will be the impact?
Okay. So I think we have been hearing in actual what happens that the as we have mentioned, there's a time frame for the input tax, and in most cases people are missing the time frame. So they're thinking that they can actually correct that by telling the supplier to reissue the tax invoices. But actually, it requires them, to cancel the earlier invoice by raising another a credit note. But you have to justify why you're gonna issue a credit note. So in this case, you miss the tax period or you miss the time frame. It's actually not an excuse to issue a credit note. Okay, so as we have mentioned, when it comes to the time frame, you have to meet the requirements. Number 1, tax invoices. And number 2, intention to pay. Once you have that one, you have 2 tax periods for you to claim that. If you miss that one, the only way you can claim that one is through what? A voluntary disclosure. That is what is actually on the public clarification.
Yeah.
There's no such thing to reissue the tax invoice through a
Please
credit
don't do
note.
that. Yeah, that's not correct practice, please. That is, we should have probably listed that as another error that we're seeing. Okay, Mr. Abdul Shakur has another question. Can I recover the input VAT on tax invoice without TRN? Example, ADDC bill, issuance of tax invoice and due date of payment mentioned on tax invoice. Normally, issuance of tax invoice will be first. I think these are 2 separate questions. So can I recover the VAT on tax invoice without the TRN? Example, ADDC bill. No, you need your TRN information on it, and your company name should be there, unless you purchased something from someone who is not registered. In that case, they will not be charging the VAT. So you should have your TRN, please, on it when you're claiming, making any claims. Issuance of tax invoice and due date of payment mentioned on the tax invoice. Normally, issuance of tax invoice will be first. Okay. Mr. Abdul Shakur, it's fairly clear what the tax point is, the earliest of either cash receipt or the bill date, or when the work has been completed. And okay, we've already answered this question. Miss May Cortez, we have unpaid sales invoice that is already considered bad debts. Can we still recover if it's more than 1 year already? If it's under bad debt, then you can write it off. Of course, if you receive the funds later on, then there is appropriate accounting transactions that you accounting records transaction that you have to enter, and then accordingly, then you can report that. I think your question is with respect whether we can recover it's more than 1 year already. Okay, Arnel, I think I understand what she's asking. She's asking whether it's already been 1 year, they've already been considered bad debt, but can they claim the VAT back that they have already paid?
Okay, so when it comes to the bad debt, it's not about claiming the output tax you already paid to the authority. It doesn't work that way. What happens that if you meet the bad debts requirement, what are those? Number 1, it should be more than 6 months, which you already, since it is already 1 year, you already satisfy one of that. Number 2 requirement is that you already supply the goods and services, and then you already paid the authority on that. Okay. Number 3, you have to write off the receivable. Okay. And number 4, you should have provided a notification to your client that you're applying for the bad debts. So if you satisfy the 4 requirements, not only the 1 year, then you can apply for the bad debts. What happened in the application of the bad debt, you are not actually claiming the output tax back to you in a form of cash. What will happen is that you have to make adjustment on your VAT return. Okay, so that's a different one, no? Because when we say claim, you're actually, you're claiming it as like an input tax, or you're gonna refund it. No, it doesn't work that way. You have to make adjustment on your VAT return under the adjustment 3rd column.
Yeah.
Okay.
I think this will also answer the question by Mr. Jean. Thank you, Mr. Jean, for joining us. If debts are not recoverable in 6 months, is it possible to apply for VAT refund? I think that answers his question as well. We're just going to take a couple more. I see there's a lot here, but we do have to conclude. We've already about to cross the 2-hour mark. So in interest of time, we will just take a couple more. Mr. Sudesh asked, can we recover VAT on the transfer of goods from free zone to free zone companies?
Okay. So yeah. So what you have to be when we're talking about VAT on the free zone, you have to be direct. You have to clarify whether you are a designated zone. Okay, so a free zone. So when we're talking about free zone, there should be a clear designated zone and a non-designated zone. Okay, so that has to be clarified, because when we say free zone but a not designated zone, the treatment is actually a mainland rule. Okay. However, if we're talking about designated zone to a designated zone provision of goods, and we have to treat that as a special case, wherein if you satisfy the requirement, it is not within the scope of the UAE VAT, meaning you will not charge value-added tax on that if you meet the requirements.
Question from Mr. Shini Jacob: if the tax invoice remains unpaid after a year, can it be reversed? I think we already discussed this in the above questions with respect to unpaid tax
one more thing about yes. Yeah, correct, Mr. Zaheer, because the things that some of them, you already claim the input tax. Okay, you claim the input tax. However, you're still not paying your you're not paying your supplier. Okay, so what happened is that you already taken you already have the advantage of claiming the input tax. So what we advise is that after 6 months, you have to pay your supplier. When it comes to you already claim the input tax on your supplier's tax invoices, and then you're still not paying your supplier. Okay, you're gonna have a non-compliance on your value-added tax on that.
Yeah.
Okay.
Thanks for mentioning that, Arnel, because it goes the other way as well.
Yes, true.
Yeah. Okay. Just a question from, I think we already answered this, from Mr. Abdul Shakur. Mr. Muzammil asked, motor for more than 10 persons for business, if it stay at business place after use. Okay, I don't know what the question is there for that. Mr. Manuel, what is the requirements to make input VAT on petty cash transactions claimable? You need to have a tax invoice. You need to have a tax invoice to claim a petty cash transaction, the VAT on that. All right. And last one, Mr. Mohammed Omer, can you explain reverse charge mechanism and transfer pricing? Okay.
Yeah, we really love to. Number one, it's for the RCM, it's a long topic. RCM is it has something to do with the place of supply rule. Okay. Yeah. And then you have to do it also for the import of goods and services. However, we don't have time to discuss this one. Yeah. And then transfer pricing, we have to wait for the transfer price when, for the meantime, UAE doesn't have a transfer price law. Okay. However, once the UAE regulation for the corporate tax will come, we're expecting that also the transfer price law will also come in the UAE.
Okay, everybody, thank you so much for being with us today. We're almost at the 2-hour mark, so out of interest of time, and I think everyone's also saturation for receiving information, we're going to close it out here. Please reach out to us if you have any other further questions on the subject, and if you have any feedback on our VAT presentation, what topics would you like us to cover in future, please communicate that to us through the same emails that you registered with us with, and we'll be happy to include that into our programming. So on behalf of the team of Alliott Shahid and Alliott Management Consulting, thanks so much for being with us for another webinar, and we'll hope to see you again soon. Thank you, guys.
Thank you very much.